In this presentation, I'm going to review the swing trading strategy's performance and compare that to the S&P 500 over time. I'm going to do this starting with the lifespan of the swing trading strategy, but then I'll also break it down and compare the swing trading strategy to the S&P 500 on a 1-year, 6-month, 3-month, and 1-month basis. This is the beginning of 2013, so year to date does not tell us much. My conclusion will offer monthly averages so that you can see exactly what the swing trading strategy has done on average in the month of January, February, March, etc. over its course of its life. Beginning with its inception, the swing trading strategy is up about 104%. The swing trading strategy began in October of 2008, and since then, it has done extremely well and beaten the S&P 500 handily. Over that same time frame, the S&P 500 is up only about 44%. Since its inception, the swing trading strategy has significantly outperformed the S&P 500. Breaking that down to a 1-year basis, over the course of the last year, the swing trading strategy, which is the blue line here, has barely outpaced, but slightly has outpaced the S&P 500. For sake of argument, we'll call them directly in line in terms of performance. But as you can see, the actual trading and the oscillation strategy are not directly in line with the market. That's because this strategy does not trade in line with the market. It is not directly correlated to the S&P 500. It can make money when the S&P 500 goes down. It can make money when the S&P 500 increases. It is a proactive strategy. Breaking this down even further to a 6-month time frame, over the past 6 months, the swing trading strategy has done just under 14% versus the S&P 500, which is just above 6%. That's an outperformance. Over the last 3 months, it has done about 2.5%, given a return, it looks like just over 1% for the S&P 500. And over the course of the last month, the S&P 500 has outperformed the swing trading strategy. But again, over time, over longer-term durations, the swing trading strategy has significantly outperformed the S&P 500. Now, what has the swing trading strategy done on a monthly basis, on average? Well, taken by quarter, the first quarter average returns have been about 4.94% for the swing trading strategy. Historically, the second quarter returns have historically been 6.59%, and the third quarter returns have historically been 5.11% for this particular strategy, with the weakest coming in the fourth quarter at 1.59%. On average, the month of January has also returned about 4.96%. February has been historically a losing month for this swing trading strategy, but March, April, May, June, all are winning months on average historically, with the best month being January. I do not know if history will repeat itself. I do not know if this January will be as strong as Januaries that we have seen in past years. But I do know that the swing trading strategy can make money if the market increases, if it declines, or if it moves sideways. I also know that the swing trading strategy has beaten the market handily over time. And I also know that it has done exceptionally well during the month of January, historically. I think this strategy deserves a close look, and I think you should take a look at it now.